Wall Street winners. It is Friday, March 14th, and I apologize for the late post here. My first video this morning was posted with no sound, and I'm still trying to work through why that happens every once in a while. But that said, in the pre-market and as well at the open and currently markets are up. They're doing extremely well today and recovering a little bit from the correction territory that they've fallen into. I wouldn't say that you can't say that they've certainly recovered, but they are moving back. I think the concern here that you should be aware of is this exuberance in the market is likely due to a couple of things. First of all, we had um, two data points out this week around the consumer price index and the producer price index, and both were better than expected or in line with expectations, probably a little bit better than expected. And that's historical data. It's based on what's been happening in January, February. We'll have another data point out for each of those in March. And it's historical. So it's looking in the rearview mirror. And if we think about that, tariffs had not been announced back in those times. So the turbulence in the market has come around the uncertainty with the tariff announcements and not knowing what that's going to mean to future earnings, future revenue, future growth, future profits. So that's why markets have gone into this correction territory. It's because of the uncertainty around tariffs. These two data points were kind of expected because nothing had been announced to make these move higher or lower in a positive or negative way. This is data coming out of the Biden administration for the most part, and just the economy doing what it's been doing without the level of uncertainty that's been introduced. So that and the fact that the US Democrats have agreed, it looks like, to avoid a government shutdown by passing the budget bill in the US and extending the debt ceiling. So that's positive to keeping things moving from a US government perspective. But all of this is going to be short lived because the ramifications, the outcomes of the tariffs that are pending now, some of them already in place on steel and aluminum, but the others that are pending between the US's two biggest trading partners, Canada and Mexico, come into effect on April 2nd. And the uncertainty around those is still out there. And whether they even go into effect or they get pushed another month creates more uncertainty. Then we've got the addition of the new prime minister in Canada and likely heading into an election in Canada after the Liberal leadership was decided and Mark Carney was voted in. So there's still a great deal of uncertainty. And so this is a minor pop in the markets today, where if we look at the Yahoo Finance app across the screen, it's pretty much green on the screen, but the VIX is still in the low 20s. So if we look at the VIX, it's still in 22.5, and it's probably going to move higher as we move into April and things continue to play out. So looking through the stocks, it's almost green across the screen, except for health and retail. And retail is going to be one of the hardest hit sectors with these tariffs because the US economy is driven on consumer confidence and consumer spending. And if prices go up due to the tariffs, which they inevitably will, whether it's a one-time movement up or multiple increases, it's going to affect consumer confidence, and consumers are going to cut back on their spending. And that is going to cause the economy to move downwards, potentially, and very likely, in my opinion, into a recession. So keep that in mind and don't jump into this market today with any level of exuberance thinking that this is going to continue, because this is going to be short lived. If anything, when the market pops like it is today, you want to be looking at stocks that you believe will take a drop and go down further. And one of my favorites in that area is Tesla right now. Although I'm hesitant to bet against an individual stock, I'd rather bet against an index going down. So I would bet against the NASDAQ or a retail index. The NASDAQ could be the QQQ. You could find an ETF that represents the retail space or sector and bet against that and buy a put option against that so that you can profit profit and hedge against that sector going down if you hold any stocks in that sector, or if you're just willing to make or looking to make a profit in that. Now, there are a few, I'm going to call them sneaker stocks, and I don't mean shoe stocks here. I mean stocks that are a little bit have been sneaking up and crawling their way back and haven't have been affected, but they're making bigger moves coming back. And I think a couple of those are in the tech space. Nvidia is one that I think is going to start clawing its way back and claw back faster than some of the others. Another one to keep an eye on is Palantir. Um, and then as we scroll down, there's two more that I would, well, two or three more. Broadcom is another one that had phenomenal earnings, and I think it's going to claw its way back a little bit faster than the rest of the market as well. And then we get into Meta and Google. And I know we're looking at primarily Mag 7 stocks here from what I'm talking about, but I think they have got a lot of potential, but now is still not the bottom. It's not the dip. This is not the time to buy it. Wait until around April 2nd or the week of April 2nd to see what happens in the tariffs and how the markets move. We may hear that the president has pulled back on all tariffs. Maybe these were just a negotiating tactic to get to some other position. We're also going to hear, apparently on April 2nd, from um, the president and the Commerce Secretary, Howard Lutnick, about the rebalancing of trade balances and how these tariffs are going to achieve that. So all of that will be interesting. And then as we get into early April, that's when we're going to start to hear the earnings announcements out of the financials. So we'll get into Q2's earnings in mid-April. And some of the first to announce will be JP Morgan, Morgan Stanley, and Goldman. And I think right now, with the exception of JP Morgan, which is still fairly high, I think Morgan Stanley and Goldman are priced very, very attractively. If they were at that price going into earnings, I would be looking at picking up some stock or some call options and betting on them increasing going into their earnings period. So that's where we are on the 14th. I'm not encouraging you to get into the market right now, but if you are in the market, it might be wise to look at some put options to hedge your exposure to the downside. And certainly wish you the best of luck in your trades today. Hopefully you got in this morning and made some money and you'll be able to get out and take your profits before the end of the day today. I would encourage you to take profits on any day where you have them right now because of the level of uncertainty. Good luck in those trades. And if you're liking the videos, please hit the like and subscribe button.